Happy Friday, everyone. This is Vinny from the Investment Club. Today I'm going to be analyzing AT&T. So here's some news that came out on August 12th. John Stevens addressing shareholders. This is on the AT&T website under the Investor Relations. He said they're committed to supporting the dividend, which has increased for 36 straight years. For 2020, they expect the payout ratio to be in the 60% range, so it's getting up there. It still has room to grow. I believe in the annual report they stated they want to keep growing it moderately each year. It's pretty high. It's sitting at almost 7% right now. So they had a successful launch of HBO Max. Definitely a lot of potential here. They have about 36 million subscribers, which is up 5% from the end of 2019, so that's good to see that it's growing. And HBO Max isn't even available on the Fire Stick or the Roku yet. So once they're able to work out a deal with those companies, you're going to see that number increase tremendously. One of the advantages Disney has over HBO Max is that it's available internationally. So you see Disney Plus has quite a bit of subscribers. They had more than 50 million in the first 5 months following the debut. They're also, it's a cheaper price, $7 a month versus HBO Max, $15 a month. But I think HBO Max, it's going to bring a lot of content. It's going to, attract a very large audience. It appeals to everyone, whereas Disney's appeal, I think, is to a more specific demographic. If we take a look, HBO Max definitely has a lot of content. See a lot of hit shows and movies are here. There's something for everyone. So I think that it will be very successful. Warner Media obviously owns DC, so you get your Batman, Superman, you got the Joker, you got Game of Thrones, all the HBO classics, you got Friends, South Park. There's something for everyone. So if we pull up their second quarter earnings, this is much more recent, July 23rd. So their second quarter 2020 earnings were down. Revenues went from 45 billion in second quarter 2019 to 41 billion. A lot of this has to do with the pandemic. I'm not too worried about this in the long run. So 2020 dividend payout ratio is going to be 60%. They have been paying down their debt, which is good to see. They had a ton of debt from their acquisitions in recent years, mainly of Time Warner and DirecTV. Now, if we look at the charts here, you'll see in 5 years, AT&T has not really gotten very far. I mean, from 5 years ago to today, AT&T is down $3. You are collecting this 7% dividend every year, so you've got to factor that in. But when we compare this to, the S&P, pull up SPY here, you see the difference. You're up a lot more than the 28% that the AT&T dividend gets you, obviously. We're talking over 70% return just holding the index versus AT&T just 28% from that dividend. They make an insane amount of revenue, 163 billion in 2016, 181 in 2019. So this is just a Goliath of a company, just more of a slow and steady type of company that you could potentially hold forever and just keep collecting that dividend year after year. You could also make the argument that it is at a pretty good buying point right now. I mean, pretty much a 5-year low. I think the lowest it got to was around 26 here, we see in 52-week range. A company that you can depend on through crises. They're always going to have the money to pay the dividend. And you could make the argument that in the case of these acquisitions, they have diversified, as great Peter Lynch liked to say. I think that when you combine AT&T, the telecom, HBO Max, Warner Media, all these different things have the potential to work as a cohesive unit and reach the biggest audience. So I just want to touch on a few things from their annual report, which I don't want to spend too long on because it is a bit dated now. It's from 2019. So it's interesting, if you look at their 3-year outlook, they said they expect the company to grow revenues from 2020 to 2022 by 1% to 2% per year. Nothing crazy here. Now, one of the downsides here, if we look at the stock performance graph, you see AT&T has underperformed the S&P 500. So the temptations have definitely been there for me lately to liquidate companies like AT&T and Comcast. When you see what's happening with Tesla, when you see what's happening with Apple, just prior to the split, and I really think after it splits, they're not going to stop. I mean, more people are going to start buying it as it becomes more affordable. Obviously, this is not a reason to buy it alone, but if you believe in these two companies, which I do, obviously you're making a lot more money. I mean, AT&T, the annual dividend, you could see that in one day of a major Tesla increase in the stock price. This is where it's important to have an investment plan and really try to stick to it. The temptations are definitely there. I do own a lot of growth companies, so companies like AT&T, Comcast, they do balance out my portfolio, and I have been trying to buy more companies like that. I've got a small position in Johnson & Johnson. These are just companies that you can depend on forever. They're a lifelong hold. You can reinvest in them, and the dividend is just going to increase over time and give you some steady cash flow. They're always going to have the money to pay the dividend.
So should you buy AT&T? Well, it depends on your goals. If you're looking for growth, this is definitely not the company for you. But if you are looking for stability in your portfolio or high dividends that you can depend on, then this is a great addition to your portfolio. I have a small position in AT&T. I would not make it a core position in my portfolio.
So let me know in the comments below what you think, if you are buying it at these levels or if you are staying away.